So we have the market green yet again, another day that the bulls appear to be taking over. But in today's show, we're going to discuss, is there real momentum behind them? Are they able to sustain this move and push it through the above resistance levels, most notably $92,000? So let's get straight into the show content. Smash the like button, hit the bell notification, and subscribe to the channel if you're not already subscribed. You can also vote over here. What comes first in your opinion? $94,000 or $72,000. Make sure that you vote in the poll, which is in the comment section, which you'll find by the description below. So let's get straight into it. You can see on the hourly, some of the coins are starting to move again. Daily, you had some really big movers. Look at that, move up 26%, curve up 11%. But at the end of the day, when you actually open up some of these charts, especially something like curve, and you have a look at the chart history, well, it's been nothing but down, right? These are simply relief rallies, right? Dead cat bounces into underside resistance over here. And this is something you need to be careful of. So remember, you can come onto 𝗏𝗏𝗡𝗏𝗏s and you can just easily look over here. If you want a quick overview of the overall trend, this has been nothing but down, right? Nothing but pain over here. Let's have a look at some of the others. Let's have a look at Bonk quickly. And then we'll get into the show content. There's a lot that I'm looking at, as well as the stock market, right? Which is also coming into key zones today. So here you can see Bonk, it's been straight down. You're getting a little bit of an upside move, but this is expected after prolonged periods of downward price pressure. There will be some form of relief at some point, right? But is there real momentum backing these moves? Or are they simply just being driven by leverage traders, by open interest rising, by futures traders opening positions? That's what I want to discuss in today's show, right? Well, we spoke about one of the potential catalysts that could bring new momentum into the crypto markets. And we had been studying this chart for a very, very, very long time, all the way back here when price on the DXY was rising. And we said, pay attention over here, watch for a potential deviation back into the trend. This would create what we call in trading a power of three, where you go through a long-term accumulation or reaccumulation, then you go through a manipulative phase, and then you go through expansion in the opposite direction. Now, if we do get this expansion on the DXY, this could bring some much needed relief into the crypto markets. Remember, as per yesterday's show, our bias has slightly shifted into that of looking for a major buy the dip opportunity following the 𝗪𝗔𝗔𝗟𝗃 buy indicator, which has an 85% profitability, which I have posted about in the Whale Room Discord. If you want the extensive view of how we're going to do this, please jump into the Whale Room Discord, right? Now, we need to look at the DXY, which drives the stock market as well and does affect crypto indirectly. And therefore, we said as the DXY comes down into this mid-range, at some point, we're going to expect a little bit of a bounce off of this. And that bounce could create the next leg down in the stock market as well as crypto. And therefore, that could provide us with the opportunity to establish those positions, right? So having a look at this, it did take some time. The DXY hung around this region over here. But if you notice these big candles over here, these are large, inefficient candles, right? Remember what we spoke about yesterday, the market doesn't like these inefficiencies, and consequently, it finds a way to come back into that to rebalance things. So if you watch the DXY spiking up over here and then finding its next lower high into this inefficiency, that's where you kind of want to time it with the stock market. You want to have a look at what is the stock market doing. Is the stock market coming down, finding a major low or higher low? And then what is crypto doing simultaneously? And that's where your opportunity comes into play. Ultimately, you probably want your positions established wherever this next lower high is created, because the next leg down we expect is going to be very impulsive and aggressive towards the downside, and that could bring all the liquidity and momentum that's needed. Right now, that liquidity and momentum is definitely not there, right? Low volumes across the board. I'll show you in today's show as well, video, what it's looking like in terms of the volumes, right? You can see there is still the bearish divergence, which is present on both the daily and the weekly time frame for the stock market, and the stock market has broken trend with a lower low breaking structure, and now it's busy rallying up. And therefore, if this is the beginning of a new trend, you do have to be careful of any sort of a lower high. So the areas of interest that I'm watching over here is you can see this rejection constantly on the daily from the RSI. So if the RSI does trend up and meet this trend line, which is downtrending over here, and it finds resistance, and simultaneously price is pushing up over here into the $5,900 region, which is going to be your golden pocket, the 618 and 65 level. That's where I'm going to be looking for weakness, right? So either way, even if this is going to turn out bullish in the coming weeks, I'll still be looking for weakness, whether it be at the 0.5 level, which we're currently at. It looks to me like today you're probably going to go through that level. Therefore, this becomes the next major area of interest, where you do have a bearish order block that did lead to the move down. And then if it gets really, really heated, possibly you can come into this daily fair value gap. But even theoretically, if the stock market does what many would call a V-shaped recovery, push up into 6,100, it's still bearish, right? That is still a bearish zone until such time as you can reclaim back above these highs. Therefore, we need to pay attention to this. And if you do come into these areas anywhere around here, we're looking for rejection. And then we can reevaluate off of that rejection. Does that rejection lead into a higher low and continuation? Or does it simply just lead into continuation towards the downside into the lower region that we've identified over here, right? Only time will tell. So we'll pay attention to these levels. This is going to be absolutely critical. It has been a brutal couple of months for crypto as a whole, especially for Ethereum. If you have a look at the Bitcoin quarterly returns, 6.69% down, definitely the market lead. And I think a lot of that's got to do with the institutional adoption, which I also want to talk about today, right? And then if you look at Ethereum down 38.37%. That's been pretty brutal. It's been absolutely smashed over there. So the question is, will we see some green, right? It's very, very rare, I think, at this point in a crypto cycle. When I say this point, I mean post-election year, post-crypto halving year, which is usually where you get your parabolic advancements and your blow-off tops within the crypto market. It's very, very rare that you're going to see back-to-back quarterly reds. And therefore, that's why I say, given the Bitcoin hash rate and bind indicator, which flashed off yesterday, and we did discuss it at length, that's probably reason enough to expect that you're probably going to see some green quarters in the rest of this year. Therefore, there's going to be some opportunities, right? But if you look at analysts like 𝗪𝗪𝗡, very, very, very smart woman over here, she's having a look at mercenaries versus missionaries, right? Mercenaries obviously out there to kill, missionaries out there to spread the word and help the cause, right? And if you have a look at this, it's been a rough quarter for the Q1 ETF flows. And it's kind of been divided between, the missionaries on the left-hand side that have got the little ticks next to that, Vanguard, BlackRock, Tuttle, UBS, Morgan Stanley, and then the missionaries, right? Or the mercenaries on the left-hand side. If you look at the 𝗙𝗿𝘆𝗽 section over here, well, they've got the most amount of mercenaries. And basically, it puts us in a tough position because a lot of the stocks are now below their 200-day moving averages. And we've seen apathy and complacency within the crypto markets, as well as now spreading into the low volumes that you're seeing within the stock market as well. And we can see it, right? We can literally see it on the chart. If you look over here, ever since those highs, have a look at the aggregate funding rate, which rose on the daily time frame. Look at the open interest, which was also rising on the daily time frame compared to all the prior times where we found those local tops. And then you spend months going through apathy, very, very similar to what we're seeing right now, right? A drop in the open interest. Look at the funding rates. Nobody wants to bid in either direction. Not only that, but you have the apathy because we can see the daily exchange volume, the 7-day moving average continues to move towards the downside. Although most recently you got a little bit of an uptick, right? You went from 33.31 billion yesterday up to 34.5 billion. So there's very, very, very small amounts of movement. Overall, if you look at the last couple of months since those November, December highs, it's been nothing but down. There is apathy over here in the market. So what is the outlook, right? What is the outlook? Well, if you do go through to, again, this post over here from 𝗪𝗪𝗡, essentially what she's saying over here, it looks like we're probably going to be going sideways for a bit, right? She thinks there's still a lot of pain left in the cycle. And basically, there's too many token unlocks. And the tokens don't care about you, as she suggests over here, right? They don't have any feelings. The tokens, if they're going to be unlocked, will be dumped into the market by those at least VCs and early investors, which is, again, why you really need to look at these trends, right? Look for the coins that have these massive token unlocks and then go through to their charts, right? And you'll see a lot of the charts are strong downtrends, right? These are powerful downtrends when those tokens unlock. Those little bit of dead cat bounces are oftentimes engineered liquidity where the market makers who ultimately also hold a lot of those tokens that are going to be unlocked are engineering the liquidity. How do they engineer the liquidity? They open up leverage positions towards the upside, and that sparks retail interest, drawing retail in to chase the pump, right? And you can actually see this on a chart, right? You can see this on a chart. You can go through to things like this, right? Firstly, let's just highlight this, right? If you look over the last 24 hours, this shows the apathy in the market. 24-hour liquidations under 200 million. This is one of the first times that we've seen that in a long time. 155.82 million worth of liquidations. That's very, very low, right? Remember, it wasn't too long ago that we were seeing billion-dollar liquidations every single day. So mass liquidation. We said, what's going to happen when all the money is wiped? It's going to be apathy, right? And then the market is going to move into extreme complacency. But what I would say is never short a dull market, right? That's an important thing to remember. Now we're starting to move into that dull market territory, which means one big player can come in, create a small market, buy much smaller. 1/10 of the money is required to create an equal size move as what was required to be in the market to create that same size move over the November-December period, right? Which is why you don't want to short a dull market. But going back to how they can engineer liquidity, it's like this, right? If we have a look over here at and let's quickly throw this on the chart over here, you can have a look at the price, right? Over here, price obviously rising. What happened with the CVD spot, the cumulative volume deltas, the spot traders down, right? Spot selling, right? These are the guys that you want to trust is the orange line over here. They don't engineer liquidity. These are the guys that are buying to hold for the long term, but price is going up. How's price going up? Well, they're using leverage, right? Perpetuals, which you can see in the aggregate CVD futures contracts. The futures contracts are rising, showing you that it's leverage traders that are playing the market and not spot traders. For sustainable moves, you need two things to occur. One, you need a rise in volume. And number two, you need the spot traders to join the party. Now, the engineered liquidity can sometimes work like a snowball effect or an avalanche where it starts as a small little spiral down the hill that builds up into a massive snowball. But for that to happen, you would need to break structure towards the upside, and breaking structure towards the upside means that Bitcoin needs to clear some of these higher levels. Most notably, at least the first area of interest is going to be around that $92,000 level. But if we really want to get technical about it, you need to get above $94,000, right? $94,000 would be the level to clear to break back above this. Otherwise, any test into that order block, the order block is always the area where it led to the breakdown. Those order blocks, you'll oftentimes see price revert all the way back into the order block with multiple weeks in a row of green price action, only to later be slammed back down. And this is where you need to be careful, right? So, as per the title of the show, which today says, what does it say today? Let's go to it. Is it safe to start buying crypto again? The truth, right? The truth of the matter is that you probably want to wait for the next pullback. So you don't want to be part of their engineered liquidity. You want to wait for the next pullback, whether that's going to lead into a lower low, because ultimately this is the very, very start of a downtrend. Or alternatively, you would wait to buy the next higher low, which means they would have to actually first break structure and then come down to create the high low. And then you would say that's the low, that's the high low, and then you become a buyer. Remember, our bias has slightly shifted because of course, the 𝗏 buy indicator, which has a very, very high success rate. 85% success rate in the past. It's very, very rare that it fails. Remember, price can go below those lows and it can still be valid. It just shouldn't close below the recent lows, right? So here's our price chart over here. You can see we've been respecting this parallel channel towards the upside. Now you're coming directly into that underside resistance, which again is why getting back above those order blocks that led to the breakdowns are so vitally important, right? So your underside resistance coming in between about that $92,000 to $93,000 region, but your order block coming in at $94,000, that's really the level to clear, and you're coming into resistance right now as we currently speak. Now, I don't expect in one day that it would roll over. In the same way, I don't expect in one day that you're going to V-shape out of here. So there is time, right? volume continues to diminish, all in alignment with everything that we've looked at over here. There are no false signals. Everything over here is telling you that there is apathy and complacency within the market, right? Flat over here on the funding rates. When you look on a high time frame like the daily, open interest has dropped, the 7-day exchange volume has dropped, 24-hour liquidation levels have gone to one of the lowest levels ever. In fact, we can even tell in the YouTube views, right? That's another way that we can see, because people don't come to watch when it's actually the most important time to watch, because this is where you get the ultimate entries into your trade. So look, people come back when there's high volatility and not apathy. And that's why, again, never short a dull market. So volume dropping, there's some high levels that we need to get back above. We need to see the spot come back into the market. Let's have a look at this chart, right? So if we have a look at this chart, remember on Friday or Saturday, we are going to be printing the next bear moon, which would also likely lead to that next move down. Remember, your job in the next 2 weeks is going to be very, very important, right? So from Saturday, you have about a 2-week period before then you print the next bull moon. Even if you do spike up over here, you're looking to either buy the next high low, which is going to be there. Well, you don't have to do this, but this is at least what I'm going to be doing. I'm looking to either buy the next high low that comes into play, or B, I'm looking to buy into key support and attempt to catch the bottom. That's what I'm going to be doing. Typically, I don't do that in no man's land, right? That's why I didn't buy this over here. I only do this when it comes into key support. Why is this key support? Well, I wanted to spend a bit of time as well on this chart, and you can see why this would be key support. Let's maybe just throw in a couple of these over here. If you have a look at this, I'm basically viewing this as a key range level, right? So if we view this zone over here, you can view that ultimately as your range low, and then you can view the top side over here as your range high. So there it is. And then somewhere in between, you're looking at your mid-range. Remember, you can always use your fib tool to measure this out to see your accuracy, right? So if we measure from the high down to the low, where does that put our 50% level, and does it look sticky enough and agreeable? Well, let's quickly click on this and remove the range quarterly levels and just look at the 50% level, which is marked off in yellow. And the answer is absolutely, it's agreeable, and therefore this is a sensible range. So this is what I'm viewing potentially to play out in the coming days. So to highlight this a little bit better for you, I'm looking at that to hopefully become the high time frame range low, which is where I'd want to buy at that range low. I'm viewing this as the high time frame range high over here, and then I'm viewing the area in the middle, of course, as your mid-range area over here. And you can see the stickiness of these zones in terms of support and resistance, right? So firstly, this is your little order block that led to the big move up. This is where kind of the market becomes or the market gets into absolutely massive trouble if you break below this key level at 66,783. This over here is your resistance. You came down, you ran back up, you had one test of that and price rallied. So it's your range low. This is your mid range, because look at how many touch points you had. 1, 2, 3, 4, 5, 6, 7, hold 8, 9 tested as resistance over there. So we had 8 as support. You came in, 1 as resistance, 2 as resistance, possibly 3 as resistance, and then again lining up with that bear moon. This is at least what I'm looking for. Even if you spike above, right? Even if you get into 93, 94K and then roll over, I'm hoping in the next 2 weeks I'm able to buy within this zone. So that's a high time frame plan. We have low time frame plans as well. Make sure to be in the Whale Room Discord if you do want that information. But that's what we're looking at over there. You are holding those moving averages. At the end of the day, you have theoretically, no, you've actually saved it. You haven't had the cross yet between the 200 EMA crossing below the 200 EMA, which is the light blue crossing below the dark blue. That has not taken place. You are crossing back up with your 9 and 18 exponential, which governs some of those low time frame trends, right? Okay, so moving on. Is the trend up or down? Remember, you can use the Super Guppy indicator to really help you to understand this. Bitcoin is red. Ethereum is red. Solana is red. Of course, if it's red, it's dead, right? It's not a long trending trade that you can take. SUI is down, right? So all of these are in downtrends. Hype is down. Zeta attempting to reclaim, but still theoretically down. Not enough chart history on that. NEAR is down. Cardano is down. Lithium is down, right? All of these are down. Aptos is down. You can go through the list, do it on your own if you want. Atom is down, AVAX is down, A0 is down. All of these are down. Phantom, which has done really, really well recently, is still down, but it's squeezing in and attempting to change that overall trend. Injective is down. Casper is down. Say is down. All of these are bearish, right? These are still bearish, and this helps to keep you out of trouble. If you're not that clued up on how the markets work, you can use something very, very simple and easy like that. Remember, I do cover this as well in Whale School, right? Guys, sign up to Whale School. If you're not already signed up, you don't need to give your credit card. You don't need any of that information. You don't even have to pay the $2,000. You can sign up 100% for free if you use the exchange link listed below. We're trying to offer you as many opportunities as possible. One of the best exchanges to trade on is Albank because they're giving you a massive sign-up bonus. Anything that's deposited under, I believe it's like $3,500, you're getting a 50% sign-up deposit, right? And if you're depositing larger amounts, you're getting a 20% sign-up deposit, which makes it the most lucrative sign-up deposit that's out there. That means if you deposit $100,000, they'll give you $20,000 that you can use to trade with, which is absolutely massive. And they're also doing an exclusive trading competition. This is only for my audience. No one else in the world has this. So use the link in the description below. You have 8 days left to participate. The first prize will win. They'll win $3,500, right? So jump into the trading competition. It's only for you guys. Nobody else in the world will do it, which means you have a high probability and high chance of winning. And then you can use that user ID to join into Whale School, right? Sign up today. And we're going to be building a $10,000 crypto portfolio for the next leg up, right? Given that we've had the hash ribbons buy indicator, which is fired off, we're going to be looking for good opportunities. That's only for the Whale School live workshop, right? Let's continue. So Bitcoin dominance riding up this trend line, right? I've looked for the line of best fit. In my opinion, this is the line of best fit because you have multiple touch points over here without breaking the candle body, right? When you're drawing these trend lines, you don't want to break the candle body. Remember, like if you drew it like that, right? You're breaking the candle bodies. That is not accurate. If you want to go extremely conservative, then I mean you're going to go wick to wick, and then you can say this trend hasn't broken. But to me, the line of best fit is going to look like this, right? The line of best fit is wick to wick to wick, holding those bodies, those wicks breach but hold, and then let's just quickly tighten that up a bit so we don't break that body. So there it is. That's showing that this is starting to break, right? The Bitcoin dominance is starting to break. It's interesting because if you look at the total cryptocurrency market cap, which I can quickly bring up over here, you can see it is somewhat holding up, right? Let's quickly go into this. There we go. So total cryptocurrency market cap, look, it lost. This is a big cup and handle formation. It did lose the neckline over there, but in terms of overall structure, it has maintained those major high lows, right? So you got your rounded bottom, you got your major low. This could be the next major high low. Bitcoin still is showing signs that it could come a little bit lower. And we spoke about this. We said it's very, very interesting because a lot of the altcoins are showing signs that they've come into their fair value gaps, right? Here's your fair value gap. You've theoretically tagged perfectly into that area. Look at that. Absolutely perfectly into that fair value gap, holding it over there. So how is it that total 2 can go up while Bitcoin still suggests that it can go down? Well, the only way that would happen is if you did actually get a breakdown in the Bitcoin dominance over here. So to me, it's too preemptive. It's too soon to actually call it. I can only call it now if it breaks below this zone over here, where I said confirmations that alt should outperform if you break below 60.2%. But it's getting exciting. It's getting interesting. Something has got to give very, very, very soon, right? So we'll be paying attention to some of these trade opportunities. The only trade opportunities that I'm really looking for this week, which is what I dropped in the Whale Room Discord yesterday, is all of the Monday range trades, right? If you look at the Monday range trades, you can just simply throw in, let's just quickly do a refresh on this, and I'll bring all of these up to showcase to you guys. But there we go. Let's have a look over here. I'm simply just looking at the Monday high, Monday low, and whatever area gets swept first, that's the opportunity to trade it in that direction, right? So, I mean, you haven't really broken this trend line properly yet, but If you start to break this, it's probably going to start to accelerate towards the downside. Some are providing long opportunities. Some are providing short opportunities. Here's hype right here with a long opportunity because you've now swept the Monday low. This is a trade that you could theoretically take right here now live on the show. It would look something like this, right? If you can get a couple of those wicks down, you're looking at your hard stop now below that wick that occurred at price point of $15.47. I'd have my stop hanging somewhere just below there, and I'd be looking to trade this all the way back to the Monday high. That is a very, very favorable risk to reward trade. This is providing you with a 10.36% move. So there are both long and short trades on the table, right? Look at the Monday range, look at which level gets swept first, and then the reclaim of that level opens up the trade opportunity. So if hype does something like this, and you can get one or two little wicks down into this region over here, you can start to build the long trade, and you can look for the move towards the upside. You can also add some additional confluence. Let's go into the 30-minute time frame over here, and you can say, having a look at these trend lines over here, if you start to break some of this, the momentum should increase towards the upside. So if you get above this, then you know that your final TP is probably going to hit. Otherwise, you probably want to take half of your profits at the mid-range level, which is going to be over here at about 16.43. So I'll drop the rest of those in the Whale Room Discord for the rest of you guys. But this is just a trade idea for those of you on the live show right now. If you do want to take that for the trading competition, guys, remember, you can win $3,500. It's only for you guys, right? So you're not competing against a massive amount of people. It's only for the crypto banter community specifically on the show. Another thing that I wanted to talk about is 𝗏𝗏𝗡𝗧, right? 𝗏𝗏𝗡𝗧 with at least their Vault token is going to be listing very, very soon. They've pushed it to the 16th of April because they have a major announcement which is coming out. They got a big exchange listing. I don't know who it is. You have to wait later on today, but I can only speculate it's going to be a big exchange, probably like a Bybit, an OKX, a Binance, something like that. What is 𝗏𝗏𝗡𝗧? There is a link in the description below if you want to read a bit more about it. They have some of the top partners in the world, and they are essentially the world's first multi-chain wallet, right? So it's the best wallet that's out there. I've used it. You can utilize it across all the various different chains, right? So cross-chain swapping, it seamlessly operates, connecting everything together. We'll talk about this more in the future. All right. Also, token 2049. For any of you that do want to go, there is also a link in the description below. You can see that the ticket prices go up and up and up closer to the event. If you are wanting to go, there is the Happy Bird. The early birds are already finished. I think those were $500. That was the ticket that I bought. If you are coming to this, you can use the link in the description below because they'll give you a 10% discount with that link. I don't get anything out of it, just so you guys know. It's literally just to help you. You'll get 10% off as opposed to paying the $719. Take 10% off. Use the link in the description below. That is in Dubai I believe it's in April, right? Sometime in April, we're going to be having that event. All right, let me know in the comments if there's anything else that you guys want to have a look at. What can we bring up for you today? Let's have a look at some of the other coins. Let's quickly see how's ETH doing in terms of its Monday range. Where's that situated? Okay, so Monday range, nowhere near the range low over there. Another one that I was looking at that I found interesting because it just had such a massive uptrend was Lithium. This would be more for a short trade. Where's that Lithium chart? Let's quickly bring it up over here. So here it is. This trade has not activated, hasn't played out yet, but this is one that I've highlighted, looking for the deviation. If you do get the deviation, you can see over here, this has been an insane trend, right? When this trend breaks, this is going to lead to a pretty sizable move towards the downside. So you haven't got confirmation yet. You're simply waiting for the deviation. You need to see a break of structure. So to time something like this, wait for the break of structure, wait for the break under the Monday high. That would look something like this, right? Hypothetically, if it were to play out from here right now, you're looking for the big spike down because you're dropping a lot of liquidity. This creates something like a 30% move towards the upside, which means you're going to get a strong move towards the downside when it does break. So you're looking for a sharp move down. a big spike up, and then you want to see that lower high form, right? That's your break of structure. This sharp move down will be your break of structure. The lower high is your entry into the trade, and then you can start to build that long position or short position. Then it would look something like this. Hypothetically, if it occurred from here, you'd be looking at something like that, right? So keep that one on your watch list. What else do we have? Phantom or Sonic. Sonic has been very, very, very strong. It is deviating this level, but let's go to the Sonic one, right? Because we are looking at the low time frame, so it's fine. It is deviating this level, but I must say, I don't think that this is one that I actually want to short. I think that Sonic is more something I'm interested in buying for the long term, since we have the 𝗪𝗔𝗡𝗧 buy indicator. It has broken this. Sometimes when you do break these things, you'll see it grind up. We've taken this trade multiple times before. I don't want to short it because they're coming out with their algorithmically backed stablecoin in about 5 days. And I still think this could be priced in towards the upside. I think you could still see higher prices on Sonic, rebranded from Phantom to Sonic. I think you could see price appreciate into that as a maybe sell the news event as the algorithmic backed stablecoin comes out. And then we'll see. Maybe there's a few hiccups and problems with it, and then that leads to the next big dip. And that should line up as well with the next 2 weeks with the bear moon coming up. All right. Let's see. What else? What else have we got over here? Let's see. How's Tron doing in terms of its Monday range? Okay, so this one's Monday range is coming in at 23. This one's in the middle of no man's land. So all you need to do is kind of just go through your list and have a look for coins that are either above the Monday high and about to drop below, or they're below the Monday low and about to get back above. Remember, this has been a big washing machine. There is no new money coming in, right? Don't be fooled. If there was new money coming in, you would see the 7-day exchange volume spiking massively and would see much more liquidations. This is a player versus player game right now with those of you who have been in the space for a very, very long period of time. And that's why you have a market in the short term where you can theoretically take those trades in both directions, right? You can be in a short trade on one coin and then a long trade on another coin at the same point in time, because it's a washing machine. They're just rotating money. They're just shifting hands, right? So they could be shifting. Let's say, for example, we just looked at hype and then let's say Phantom, right? They could be moving out of Phantom or Sonic, dropping the Monday range, high and exiting that position into hype. It's all just a big shift. All right. The other thing that I wanted to mention, guys, is that the cyber crime is on the rise, right? The cyber crime is on the rise. A lot of people are getting scammed. Please be very, very careful out there. The first thing I want to say is the easiest way not to be scammed is don't give your money to anyone. The second thing is don't click on strange links that you can't identify. Somebody actually tried to get me just the other day. True story. So my NordVPN did pop up. I really highly can recommend that all of you pay the very small fee of $3.85 per month, less than the price of a coffee, to get a VPN. I received a strange email and they made it look like it was an OTC IDO deal that I'd invested in. They call them SAFTs, and I had to claim tokens, right? So I went to the email and I thought, okay, you never really read who the email is from. That's pretty easy to mask, where they can create the initial of the part of the email looking legit, and then they put a string of code behind the end of it to which you're never going to read because you don't click it, like expand all. And basically, I clicked on it, and the whole NordVPN came on saying looks like a malware attack. Be careful, and it put a big red page across my screen and said warning. So I just deleted the email, and that was the end of it, right? So protect yourself. Have a NordVPN. If you don't want NordVPN for some reason, use any form of VPN protection. Mask your IP address. Be careful out there. It does give you threat protection, anti-malware, and also removes ads, right? Which is a great thing. So there is a link in the description below. They're giving you, I think if you use this link, you're getting 67% off, right? So there it is. NordVPN, click that link, get your 67% off. And also, guys, jump into Whale School. All right, let's do a couple more. Let's do a couple more requests over here. What else? Let's have a look maybe on some of the things on the high time frame. Let's have a look at 𝗬𝗎 actually on the low time frame and then on the high time frame. Where is our 𝗬𝗎 chart? So 𝗬𝗎. Okay, guys, my eyes are losing these things over here. Let's just find it. 𝗬𝗎. There we have it. Okay, 𝗬𝗎. Okay, that's why it's gone all the way to the bottom now. 𝗬𝗎 breaking out. So you don't. This is why you never blindly short the Monday range trade strategy or long it as well, because it can extend very, very far, right? You need that confirmation. If you look at 𝗬𝗎 over here, it is looking good. Why is 𝗬𝗎 looking good? It's broken this trend line, right? We spoke about this days ago where we said you're coming into the momentum oscillator, blue dot buy signals over there, while simultaneously having perfectly tagged the support level. This is the equivalent of Bitcoin coming down to $72,000, by the way. So some of the coins have already done that. They've done that test. Now, safe traders would still not be too late, just by the way, right? Safe traders would be waiting for a proper high to form, price to then come down and form a macro high low, and that would become the safest entry. But if you were trying to be a snipe enter, like enter as a sniper, then you'd be looking for the exact test into that zone, which is exactly what you got, right? We're looking for anywhere over here between 198 and down to about 191 as the key area of support to be found, and then price to bounce out of there. So there are some good things happening, right? Let's quickly have a look at Hype. Hype, remember, we did give the long trade over here as well. This was live. We put the stop loss into break even over there. So this trade has mostly played out. Given that today's Monday range trade opens up a long opportunity on Hype once again, you might actually get the full move up to about 80, 90, but that does become a bearish underside retest where you probably want to take your profits. Remember, the order block is the area where you're going to struggle, right? The order block is the zone where the breakdown took place, and this is your order block, right? Highlighted in pink over there. That's your order block on the daily. The little consolidation that happens over there that leads to the breakdown, that becomes massive resistance, right? If you can even get through 19, then you're going to really struggle at 20. So a lot of work needs to still be done for these coins for swing trades. These are all mostly short-term trade opportunities on the hourly that we're looking at. Long-term trades, swing trades, not yet. All right. Yes, guys, jump into Whale School if you do want to learn more about these things. Also, jump into Whale Room as well. And that is it from me. I will see all of you on the next one. I hope you have an absolutely wonderful day, and we'll see what the market gives us for the end of the week. Cheers for now.